Hi, everyone. Good to be here. I'm Kate Rooney. I'm a markets and tech reporter at CNBC. This is going to be a fun fireside chat, although we are digital, so it feels more like a virtual chat. But we'll hit some fun topics here. Regulation, financial health. I'm excited to have first Manning Field, Chief Operating Officer of Acorns, also a member of the Consumer Financial Protection Bureau, Consumer Advisory Board. It's a mouthful. Manning spent some time at Chase Bank before joining Acorns about 4 years ago. So from Wall Street to Fintech, that's always a fun perspective to get. And then we have the director of the Consumer Financial Protection Bureau, Kathy Kraninger. She's been there since 2018, or been the director since 2018. Was a former Department of Homeland Security. I want to say executive, but you were you worked in the Department of Homeland Security and the Office of Management and Budget, as well as a few other things. And you were a member of the Peace Corps in Ukraine, which we were just talking about in the virtual green room. So welcome to both of you.
Thank you.
Thank you so much for having me. Fantastic to be here.
Good stuff. Well, let's get started. A couple of themes. I kind of want to set the stage for what we'll be talking about. First is financial health, savings, and investing. That's a big theme this year with everything going on. How Fintech can help in that mission in terms of financial health and promoting that, and the balance between innovation and consumer protection. So really interested to get all of your thoughts on that. I will start with you, Director Kraninger. Even in the past 2 years, it feels like Fintech has taken off. It's changed a lot since you became the director of the agency. What do you see as far as potential for the industry and what's ahead, but also some of the risk there?
Well, it's a fantastic question to start out with. Certainly there is, I think, a lot of opportunity, but we've got to look at that with risk mitigation perspective as well. And it's a conversation that Manning and I have had, and that we've had with our Consumer Advisory Board that had a heavy Fintech presence in the prior year. And it was around, I think there's some real opportunity here in terms of access to credit. So part of the CFPB's mission is that facilitation of innovation and access to credit. And so alternate data, different ways of approaching underwriting in terms of using AI and ML. That is an area where we're having certainly a lot of conversation and seeing what is being thought about as really that will be consumer beneficial in terms of adding information for those who really don't have a credit profile or who have had challenges in the past with their credit scores, looking at that and looking at what could benefit them. So there are a lot of entities doing that and thinking about it. There are certainly risks there in terms of how that applies to particular individuals, how that applies with respect to different protected classes and the Equal Credit Opportunity Act. So we at the CFPB are looking forward to continued engagement on this. And I know we'll talk quite a bit. I'll probably say it in response to every answer, so I figured I'd just tease it here. Our innovation policies are a way to do that. So we issued a no action letter, sandbox, and trial disclosure policies to get at this and facilitate that conversation for those that are thinking about things that might be a little different than what is traditional, which is certainly what the fintechs do.
That's interesting. I think the credit scoring is a great example of that. It feels like fintechs were definitely early on that. Great example. And Manning, I want to ask you, coming from JP Morgan, working at a fintech, what has your experience been dealing with regulators? And have you seen a difference? And like I said, it's changed a lot in the past couple of years. What has your experience been working with regulators and explaining some of these things that might be innovative and seem potentially risky on the face?
Yeah, no, I mean, it's definitely very different in a big institution that's regulated. Obviously, JP Morgan Chase is regulated by many entities. And most in fintech, Acorns as well, are really regulated by a narrow set because they typically go to market with, a single product offering or a single point of view in the marketplace, as opposed to a big diversified financial institution. And so with my experience at Acorns, not only working with the Bureau, but also working with FINRA and the SEC, we really, and I think a lot of our fintech colleagues and competitors and compatriots really have a very strong customer orientation, a very design focus, and a very data-driven focus. And so when you sit down with any partner from a regulatory body and your starting point is a strong customer orientation, those conversations have a tendency to go very, very well. I think it's really when you get into areas where there's a disconnect between the business model and customer success is where those conversations get much more complicated. But we really try to build kind of that healthy dialogue with our partners on the regulatory side, because at the end of the day, we're actually trying to do the same thing, which is protect and grow the stability of our economy, and through building confidence within the Americans that we serve. And I think what Fintech has been able to do is actually go serve segments and markets in ways that they hadn't been served before, and getting us to a place where we can actually give access to consumers that didn't have access or didn't do things, didn't believe that they were able to do things that Fintech is enabling them to do.
And I want to pick up on that point about access. Director Kraninger, I think about PPP, some of the emergency government loans, and Fintech companies being able to take part in that. You've got Square was a part of it, Cabbage, PayPal. That to me stands out as an example of how Fintech was able to help during the pandemic and use some of that alternative data and help those that might not be served by a bigger bank. I'd love to get your take on that. And then just other ways that a lot of Fintech companies may or may not be stepping up to the plate during the pandemic.
Definitely that agility and customer focus is, I think, what so many of us strive for. Look, I certainly, in terms of agility, the government is not a great example of agile response a lot of the time. And so that's something that we're certainly looking at. And so it's definitely something that you can admire with any startup organization. But being able to be responsive to consumers, and that's something I'm proud of that we did do during the pandemic. That this stand-up of PPP writ large was a massive undertaking. And frankly, I really do thank and appreciate all of those entities that stepped up to play a role in that and to support their communities and accessing those funds, as well as really the EIPs as well. There were a lot of efforts here in terms of making sure that consumers knew what programs were available to them, in some cases what they were entitled to. Certainly when you talk about the economic impact payments, the mortgage forbearance options. So they were entitled to those things. And then other programs that are, at issue here. So continuing to think about that as we move forward. And it is something that I think a lot of these companies can bring in terms of their agility to respond. So that's I think, a benefit and one that we certainly are looking to capitalize in terms of what we can do to help reach consumers and support that access that you were starting with.
Back.
You have good timing. I was wondering if you'd make it back quickly.
I just missed your answer. I don't know if you got to more than one question, but
No,
she just finished it. I unfortunately missed it, but I'm sure it was great. Very sorry about that technical issue on my end, on the Wi-Fi side. Anyway, thank you for picking up the slack, Manning. I'm sure I'm jealous that you got to hear the answer. Let's see, where to next? So I think the PPP example is great. There are definitely opportunities for Fintech here. It also seems like there are opportunities, unfortunately, for criminals, as you see a lot of new people entering, whether it's investing or savings. And folks that I talk to say that there are criminals and there are sort of nefarious actors seeing this as an opportunity. How do you think about sort of the cybersecurity side of the industry and that aspect of consumer protection?
I'm on a mute, so we're all having our technical challenges. At any rate, that is certainly a very critical issue as you look at, particularly in the pandemic, people are engaging even more in the digital world than they were before, because that's their way to engage each other and their way to engage financial services. And so that opportunity, unfortunately, is one that many take advantage of if they're looking to defraud, particularly the most vulnerable in our society. And so that's something that certainly the CFPB, our fellow regulators and law enforcement generally are working really closely together to identify those perpetrators, prosecute them where we can, and also make obviously people aware of how they need to be, as careful as they can be in cyberspace in general. There is certainly a lot of engagement and work with financial institutions, and some of it's outside of the CFPB sphere, but how to ensure that they're complying with cybersecurity requirements, and that's part of the safety and soundness regime for those that are covered. And certainly, I would hope those in the fintech space who live digitally would also be aware of and conscious of those dynamics and issues, and taking responsibility to mitigate risks, to protect their customers, and protect the information that they hold.
And what about Manny? I'd love to get your take on that on the company side. How do you think about that? I'm sure it's one of, I don't know if it keeps you up at night necessarily, but I'm sure it's a risk and a fear internally that you'd hate, any sort of data breach or hack. What are your conversations like internally about cybersecurity?
I mean, for us, it's been an ever-present priority. It's the biggest risk that we carry is just in our business today, and it always has been. Just given the scale and the information that any fintech company has, that's something that we take very, very seriously. We do not have the legacy of a big institution that we can fall back on if there were an unfortunate event. And so from a brand and a business risk perspective, it is the most important thing that we think about. I would say, one thing I would make, I would separate the cybersecurity risk from kind of abuse around the pandemic, because those are two very different things. We obviously monitor both of those things, and we have seen, customers having, being taken advantage of, or attempts to take advantage of them through kind of scams. And unfortunately, kind of the bad actors seize moments like this to actually really take advantage of people in desperate situations. And so, we work really, really hard to make sure that we protect our customers, from those fraudsters, and work with our regulatory bodies and law enforcement when we catch bad actors.
Got it. That's great. Well, I want to pivot to some proposed rulemaking on 1033. I know that's sort of wonky, and I'd love, Manning, if you could explain sort of what that is, why that could potentially have an impact on fintechs like Acorns.
Yes, this is my favorite topic as an advisory board member, and I think every meeting, even if it wasn't on the agenda, I brought it up. But 1033 is in Dodd-Frank, and it just gave the Bureau the statutory authority to require and set rules around making customers' data, financial data, available to them in machine-readable format. And so what that really means, in kind of in human terms, is customer has a right to their own financial data, whether it be sitting at a large institution or a small institution, but that data is not the bank's data solely. It is the individual's data, and they have the right, and that data should be portable, and it should be allowed to work with other pieces of technology that consumers have selected to manage their financial life. And so what 1033 hopefully does, and I'm very excited that the Bureau has started kind of the rulemaking process on this, but what it does is it's the lifeblood of fintech. Fintech does not work without financial data, and access to financial data, and access to whether it be bank data, wealth management data, credit data. And we believe it's a fundamental right of an individual to have access to their own data. And so while the ecosystem has evolved quite rapidly in this space, whether it be with big institutions, whether it be with data aggregators, the absence of rulemaking and guidance from the Bureau has created a little bit of a Wild West scenario. And what we'd like to do, I think, from everybody in the ecosystem, is make sure first and foremost that it's safe and secure and sound. Secondly, we think it should be a level playing field between every institution in America. And thirdly, and most importantly, is this is a consumer right. And so I think I'm just very excited where this is going to go. And I'd rather, I think a government and commercial partnership to get to the right answer is the right approach here, as opposed to a purely commercial, private-driven solution.
Got it. And another topic that it seems like it takes the government private sector partnership, financial literacy, huge issue. Yep. It feels like both of you guys are doing different things and taking different approaches. Director Kraninger, I'd love to get your take on what the CFPB is doing and how you even change an issue that's as systemic as that. Does it start with education in schools? What's on the roadmap for you guys?
You're certainly hitting that from all angles across the board with respect to education. It is a big part of our mission. Congress gave us a clear responsibility for engaging in financial education, and we do it through all kinds of different means. We recognize that we're not sitting there with consumers when they make decisions. The financial institutions that they're engaging with, whether it's creditors and lenders, companies like Acorns, there is that engagement piece and that opportunity to give consumers the information that they need in a way that they can understand it. And so that's certainly a huge part of it. We do a lot in terms of research-based and research-driven efforts to say, where is there a gap in terms of understanding? Where is there an opportunity that the government is well postured to provide whatever is missing? And how do we also amplify all of the great work that's out there? One of the things that we found is there is a lot of financial education material out there. But the question is, is there a bias or a bent? Is it complete? What entities are trusted? And so we're looking a lot at how we partner with other entities to again, reach individuals. I've got a lot of work that I've done that we've talked about, frankly, is influencers too. We produce a lot of material, but we don't necessarily have the same reach that so many other influencers might have, particularly if you look at the way social media works today, to get that information out to people in the most usable way for them. So I'm actually engaged in a lot of conversations around that with some household name individuals and household name entities to try to just, again, amplify that message. And you talked about schools too. I mean, frankly, it is our responsibility to be with people at every phase of life. Congress gave us particular populations to pay attention to. Those are underserved, older Americans, service members, students. So those are certainly places where we spend a lot of time on those kinds of special populations. But as we noted, at any point in the financial spectrum too, we've got information on, how to choose a mortgage and a lender and how to go about that process, how to think about savings, how to think about debt. So there are a lot of different facets of this that we want to partner with, again, all kinds of people, including fintechs, as to how to get that information out there in the best way possible. And really, that materials for teachers and parents too. There is a lot out there, and I think we're a great resource for knowing what's quality material and getting that out.
That's interesting, the social media aspect. I would think that's probably a way to get to younger consumers. What does that strategy look like? Is it TikTok? Is it Instagram? Is there a certain platform you guys are leaning on?
Well, we're actually going to rely on partners to be, the front end of that. Again, to think about who's going to be most successful in actually reaching that audience and how will they get there. But I will tell you one thing we have started is some video casts, doing podcasts, video casts. Those are formats that we just have not in the past used. And when I walked in the door, I said, why not? That's what people are doing today. And it's got to be a mix. There are still a lot of financial counselors who work particularly with the underserved. They still want paper, and that's still the most useful thing for them. So we are absolutely maintaining those channels and those resources, but it is a spectrum, I think, trying to reach, again, people where they are.
Got it. And man, I mean, you guys do a ton on this, and it's obviously through Acorns, but that has been a huge focus for the company. I'd love to get your take on that and why and how that became a priority. You're obviously a for-profit company. When did financial education become top of list for you guys?
It's when the company was founded. It's always been a core to our product strategies. And it's actually, for us, is not really a content play, where I would say most other institutions take it that way. For us, we're a brand that, it's we're a metaphor, right? We're an acorn. It's a seed that grows into a mighty oak. And so we believe it's critical not only to grow and save and invest every day, but you also need to build financial confidence. And because we're a brand that's also rooted in kind of hope and optimism, we think the marrying of educational information that's helps me get to the next step, but also marrying that in a product with action is actually the most effective way to drive behavioral change through education and build more kind of confidence and get to the outcome that our customers and everyday Americans are trying to get to as far as a more secure financial future. And so for us, the educational side of what we do, we run it like a product, we invest in it like a product. We have over 20 people that work on this as their core job. And in this moment that we're in as a society through this pandemic and the economic challenges that come along with that, the needs for financial education are even more pronounced as people are trying to figure out, how do I file unemployment claim? How do I get a PPP loan? All of these things. The Bureau actually was very deeply involved, and we were inspired by a lot of the things that they did. And we also, as we got into that moment in mid-March where, this thing became, I think, real for everybody, we started publishing a daily newsletter just around 3 things you need to know about the markets, your financial education, and through that kind of distribution, as the director said, the way in which the Bureau has partnered, we promoted, to millions of customers, we promoted access to those tools and the content that the agency, the Bureau, had prepared. And so for us, what we've seen in just our educational content and the destinations that not only customers experience, but just, kind of the Acorns non-customers experience, if we look at the month of September, year over year, we've got 1,000% increase in unique visitors to that content. So over 3 million people consume our educational content on a monthly basis. And that's not, that's not divorced from the product, it's embedded in the product. And so we think actionability and digestibility is a critical component. And I think the last thing I would say is around just the influencer side. One of the things that we've done is, we work with, the entertainment industry. And so most recently, we just launched a big partnership with Dwayne Johnson and Danny Garcia, and is a part of a new product launch that has education built into it that's really helping get kids to start to save and invest today. And that's gone quite well. And it really helps kind of break through kind of the noise out there to get to what we think is the heart of a message around progress rooted in education.
Got it. Yeah, it's been really interesting to see. I know that you guys uniquely sort of present people with articles that are have to do with the products that they're using. So I think that's definitely important from a consumer protection standpoint. We talked about this, or mentioned it off the top, but the whole debate and I guess balance between innovation and protection. So you want to protect people, of course, and especially as we see these record new entrants into the stock market, into investing, but you also want to protect them. I'd love to maybe close with sort of your thoughts on that balance and sort of drilling into that. And Director Kraninger, maybe you can kick us off here.
Oh, happy to. I will say I've never loved the analogy of a balance, because that implies that, of course, as one goes up, the other goes down. So that's definitely not the way I think about it, because it really is about facilitating and harnessing innovation for its best outcomes for consumers. And so having that protection, baked into things certainly is part of what we're looking for and we expect. Again, the law is not optional in terms of compliance, but there are absolutely some creative ways to think about how we can better empower consumers, better inform consumers, help them make the best choices for themselves, and provide them with that, with that information. I mean, information and understanding is definitely a key part of, again, of those protections that exist in the marketplace.
Manning, I'll give you the last word. I think we're wrapping up here, but thoughts on the, not necessarily the balance, but the two topics.
I'll be very brief. Like those things on the opposite end of a barbell don't make any sense to me. Like, we're talking about people's money. We're talking about people's future. So if you are trading off innovation for protection, then you probably don't belong in this industry.
It's a good way to end it. Well, good. Thank you both so much for being here. That was a pleasure, and hopefully we'll be able to all do this in person sometime soon. But appreciate you the time.
Thank you so much.